Hey everyone, Couch Investor back to another video for today. So in today's video, let's talk a bit about Alibaba. It's a Chinese company for those that aren't aware. So of course, there's always that risk of it being a Chinese company. That's about it. I've covered this company numerous times on this channel. I always said the same thing. Great business, but there's always that risk that you have to keep in mind. Now I know lots of my viewers actually own Alibaba. Of course, it has been down a lot in the last couple of years actually, but since its lows, it's actually up close to 100% already. Why is that? What has changed? Well, we're going to talk about all of that in this video. News price targets, of course, as well, because as you know, analysts do love to change their price targets when the stock is already going up. That's just the way the game is being played. So first of all, let's have a quick look at the current state of the company. As you can see, in recent years, quarters, let's say, revenue topped, and then because of the pandemic, because of the lockdowns in China, it has come down a little bit. We've seen that also with the profitability of the business. You can see this here with the free cash flow as well. The last 12 months, it's still $14.2 billion. That's why they were also able to repurchase more shares of the company, but we might see it continue to go up as now the Chinese economy is reopening, less restrictions, etc. should be much better for the business. Now, as for return on equity, of course, we've talked about that, slowing growth, so return on equity has come down as well. Same thing with gross profit margin, and now with price to sales ratio in the next 12 months, we're at 2.2 times. When you look at the forward PE here, it's at 13.6. So that's the current state of the company. It is at $309 billion in market cap. The price at the time of making this video is $117. We're going to have a look at the graph later on in this video. So that's, let's say, a quick summary of the state of Alibaba right now. Now, before we jump into the other stuff, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and if you want to support me and this channel, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to full.com/couchinvestor. And of course, if you own any other Chinese companies, do let me know down in the comments as well. Now, if we needed a little reminder of the last quarter, so you can see that the company as a whole is still growing, right? Total revenue grew just 3% year over year. But of course, we know with the difficulties in China, the Chinese economy, 3% is better than a decline. And then if we go over the other stuff, China e-commerce declined 1%. Of course, in 2023 might be much better. Then with regards to international commerce, that grew 4%. Local consumer services grew 21%. Cainao or Cainao, can't really remember how you have to pronounce this, but that actually grew quite a lot, 36% year over year. The cloud grew 4%, digital media entertainment 4% as well. Then the rest, the innovation initiatives and others, basically the more riskier parts, that decreased by 45%. Overall, income from operations already increased 68%, so a much better performance in 2022 than in 2021. Now, all the rest, of course, profitability of the business was hit a lot. Most analysts, most investors probably are betting that 2023 will be a much more profitable year for Alibaba. And now before we go and look at the new price targets and the new analyst notes, of course, we have to talk about Jack Ma and the Ant Group. So if you haven't heard, the Ant Group made an announcement last weekend. So in order to continue to optimize their corporate governance and achieve long-term sustainable development, they have been undertaking several initiatives since 2021. Long story short, the main result of the adjustments will be the change, the exercise of voting rights of Ant Group's major shareholders, from Jack Ma exercising voting rights jointly with persons acting in concert to each of 10 individuals. So what will happen according to Ant, Ma will see his voting rights shrink from above 50% to roughly 6.2%. And so from a CCP standpoint, this is obviously great. And now here come the new price targets. So first up, we have an upgrade to conviction buy from buy at Goldman Sachs. So The price target has been raised from $133 to $138. The analyst believes the worst is behind Alibaba after 2 years of downward earnings revisions, with the largest room for valuation multiple repair amongst the mega caps as its top line growth resumes and 2022-2025 earnings resume the mid-teen growth. I probably agree with that. Then we have another price target raised from $100 to $150 at Morgan Stanley, and it keeps an overweight rating on the shares. He also elevates to a non-consensus top pick for the first time in 3 years. He also identified Alibaba as a research tactical idea given his belief that the share price will rise in absolute terms over the next 60 days, believes the market has underappreciated Alibaba's leverage to a consumption recovery in China. A likely stronger rebound in categories in which it has higher indexing and monetization rates, such as apparel and cosmetics, are likely to drive customer management revenue to return to positive growth in fiscal Q1 of fiscal year 2024. Continuing here with the price target raise, this time at Citi from $144 to $160, he keeps a buy ratings on the share. Looking into 2023, the analyst sees upside risk to a potentially faster than expected rebound of consumption recovery in China. She sees the recovery of fundamentals, timely completion of a Hong Kong primary listing conversion, and possible approval of Stock Connect as further catalyst for Alibaba shares. And then the more recent one is at Barclays, raised from $114 to $141, keeps an overweight rating on the shares. The company's December quarter results are likely to feature broadly in-line revenue and better margins, but importantly, Alibaba should finally see growth in gross merchandise volume, or GMV, in the March quarter for the first time in 12 months. I believe guidance here will be extremely important. So as you can see, suddenly analysts are becoming a bit more bullish on the company. Of course, it's not just because the stock price has gone up in recent months, but also because of what has been happening in China. Of course, the lower COVID restriction, let's say, helps a company like Alibaba, helps especially the economy in China. But since Alibaba is heavily focused in China, but also internationally, it's going to help the whole business. Then the news with regards to the Ant Group with Jack Ma is just furthering, let's say, adding to more bullishness around that company. Now, I'll repeat myself, it's a great business, as we've discussed on this channel many times. Alibaba as a whole, every aspect of the business, it's a great business. Of course, because it is a Chinese company, because a lot of its business is in China in the last 2 to 3 years, let's say, it hasn't been something that you would have touched. But coming out of the pandemic narrative, of course, sometimes you just have to look at the company itself and say, maybe it's too hard to pass on. But I know there is risk to it. It's not in my personal portfolio, but I know a lot of my viewers do have it in their portfolios. Now, before we conclude this video, let's have a quick look at the graph. So as I said, in the last couple of months, as you can see here, it's up 85%. So no surprise to see all those price target rates. Now, this is on the weekly chart. Of course, this huge green candle here over the 200-day moving average is certainly something very bullish and something to keep an eye on, because the next one has also been green, but we're now reaching the stage, let's say, where last time we got a little rejection here at around $120, and then we went on our way down. But last time we were under that 200-day moving average. So right now, let's see if that strength here can continue. When you look at the RSI, we're at 65. When you look at the MACD, still very bullish, and now we're over that 0 here. So again, the momentum is here with Alibaba. And so to conclude, it's no surprise that a company like Alibaba is probably high on the list of top picks for 2023 when it comes to a lot of analysts. Not just because the stock price has gone down a lot, even though it's up 85% in the last couple of months, but overall it has come down a lot, but it's still a tremendous company. And the fact that China is reopening, the restrictions are coming off, Alibaba should benefit from that, and so you will see it a lot in those topics for 2023, and it's not really a surprise. Of course, if you still hold the company or if you're thinking of buying, do let me know down in the comments below, share your thoughts with everyone, and if you enjoyed this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.